Hi friends, I promised in the earlier video that I'll come out with a post-budget video. That is, what is the significance of the budget as far as an individual concern and in the share market perspective. I thought of releasing it yesterday itself, but due to some other important work, I'm right now in Sydney, so I got up with some other important work, so I couldn't published this yesterday. It was shot actually one day before. That is yesterday evening, if I remember correct, as per when Sydney time is concerned. Anyway, it is only for record purpose. We are not going to take any immediate action against the outcome of the budget. Our main problem now is only Adani. So in this video, I'll put some important features as far as individual is concerned. I'm going to take up this budget only in the individual perspective and share market perspective. Because in any budget, the government will come out with their policies regarding inflation, youth employment, women empowerment, defense policy, education policy, railway policies, etc., etc., etc. But according to my belief, those things are not directly and immediately to have an impact on an individual like us. Okay, so we will take this video into two small categories. One is individual taxation, and the second one is share market perspective. What about the individual taxation? We are bothered about the income tax. You all know that there are two regimes, one is old and one is new. From this financial year, old regime is scrapped. Only by default, the new regime will come into force. Okay. But in spite of that, if anyone wants to take up the filing under old regime, they can do it so. As far as non-salaried people are concerned, they can opt for the old regime filing at the time of filing. They can go straight away into the portal and file it under the old regime. As far as the salaried people are concerned, if they don't express their wish to file under the old regime, then they cannot file. They have to file, express their wish to file under the old regime to their employer at the beginning of the year, which is April of 2023. Why so? You all know that TDS has been deducted from their salary on a month-to-month basis. So only after the expression of interest from their side that they are willing to go for the old regime, it can be done. If there is no mentioning about the interest of filing, then automatically the regime of income tax filing will come to effect for them also. Hereafter, there is no old regime of income tax filing by default. That is scrapped by default. Only new regime is in force. Okay. Now let us go into the salient features of the income tax as far as the new regime is concerned. Old regime status quo. They have not touched any point in the old regime. No deduction change, no rate change, no benefits, no concessions, no extra burden. Nothing is there. It is status quo as it was in the previous year. But they have given a huge concessions for the new regime. Why so? They want to ensure that hereafter only the new regime of tax filing survives. Okay, point by point, we will look into that. According to me, this is really a very good budget as far as individual people like you and me are concerned. Point number one, they have increased the basic threshold non-taxable limit to 3 lakhs from 2.5 lakhs, which means up to 3 lakhs of your annual income, you need not file income tax, you need not pay any income tax, you need not invest anything for saving your income tax. That is one plus point. This is very small, only 50,000. But many of us will be earning 3 lakhs per annum. The second point, they have increased the rebate. In the earlier regime, up to last year, the rebate on your income tax is given up to 5 lakhs, which means if your annual income is 5 lakhs, your tax payable is zero. How come? Up to 2.5 lakhs, it was zero. From 2.5 lakhs to 5 lakhs, it is taxed at 5%. Sorry, that 5% is amounting to 12,500. That entire 12,500 is given as a rebate under Section 87A of the Income Tax Act. That limit, that is 5 lakhs, has been increased to 7 lakhs. This I feel is a very, very significant and very, very useful and very, very, advantageous for our low group income assessees. You need not say that this is low income, this is middle income, because 7 lakh up to 7 lakhs for non-salaried class and up to 7 lakh 50,000 for salaried class. There is no need for any investment. They need not pay any income tax, but they have to file the return by claiming this rebate under 87A. And one more point, third point, first point is up to 3 lakhs, second point is rebate is given up to 7 lakhs, and the third important point is for salaried class. As for till the last year, the salaried class were given standard deduction of 50,000 only under the old regime. The new regime, they were not allowed even this deduction. You already know that there is no investment deduction for new regime, and they have not allowed for even deducting this 50,000 under under standard deduction for salary till last year under the new regime. Now they have brought that 50,000 standard deduction eligible for the new regime salaried class, which means if you are a salaried person and your annual income is 7,50,000, your tax outflow is zero. Because out of 7,50,000, you deduct 50,000 as standard deduction, then your net taxable income is 7 lakhs. On that 7 lakhs, you compute the tax. That is up to 5 lakhs, it is 5%. And that is from 3 lakh to 5 lakhs, it is 5%. From 5 lakh to 7 lakh, it is 10%. On that 10%, you deduct. I mean, on that 10%, you calculate the enter tax payable on 7 lakh. Whatever the tax comes, that is entirely deductible under section 87A. So up to 7,50,000 of salaried employees' income and up to 7 lakhs of non-salaried employees' income, like income from your house, income from your investments, any other income from other sources, interest on deposit, something like that, that is exempt up to 7 lakhs. So this is a very big boost for the individual taxpayers. Most of our circle people will escape from tax paying fraternity. So this is point number 3. What is the point number 4? So 50,000 is over, 7 lakh is over, 3 lakh is over. That other point is not for us in the sense, not for the lower, middle and upper middle class taxpayers. Only this is for the rich, very ultra rich people whose taxable income are more than 5 crores. Net taxable income is more than 5 crores. They were charged a surcharge of 37% on their income tax, the highest surcharge. That has been reduced to 25%. From 37% to 25% is really very huge. It is not on the income tax. It is on the surcharge of the income tax. So, which indirectly means that those people will be saving, 3.5% to 4% on the net tax pay. This is really very huge because 6 months back, even your FD interest were around 4 or 4.5 only. Now they've increased up to 7.5% because of the inflation and other things. So almost FD interest they are getting by way of this reduction in the surcharge. So this is another very important and boosting point for the income tax payer. And one more point. This is really very big, but the persons who are going to enjoy this will be lesser. What is that? Your leave encashment. You people will be knowing that when you are salaried, you will be having some leave accumulated into your account, and against those leaves you can convert that into salary and get at the time of retirement. This is called as leave encashment retirement. On this leave encashment retirement, whatever the amount you receive as a staff of central government, state government or public PSU, that is private sector units of government, those people are totally exempt, whether they receive 1 lakh or whether they receive 10 lakhs or 1 crore, whatever it is, that is totally exempt, that is not taxable. So for them, it is immaterial. This is what I'm going to talk is irrelevant. Now, this is for whom then? For private employment. The person who is employed in the private sector, like IT and other things, and getting retired after 1st of April and receiving leave encashment, they are going to get a huge benefit to the tune of lakhs in tax saving. I'll explain why and I'll explain how. The earlier limit of this leave encashment under the new regime till last year was just 3 lakhs. If they receive 3 lakhs, up to that 3 lakhs of leave encashment is exempt. After that, it is taxable as at the normal taxable rate in which they belong. From now onwards, that has been increased to, hold your heart, 25 lakhs. Can you imagine this? From 3 lakhs to 25 lakhs, it has been increased up to 25 lakhs of leave encashment benefits received by an employee from the private sector on retirement. They need not pay any tax on that. It is up to 25 lakhs. That is exempt. It is really very, very good and great impetus for the private employment people. This is point number 4. So I've talked about all the positive things. Is there any negative thing as far as we people are concerned? Yes, there is a negative thing, but this also will not going to affect most of our people, because here also the limit plays a role. What is that? We people always take life insurance policies for 2 reasons. One is for tax saving, and one is for our life concern. If we are not going to exist anymore, and what the benefit you are going to be given for your nominee, that will be useful for your family and your relatives, whatever it is. So in these 2 aspects, we take life policies. On these policies, we pay premium. Okay, these premium are deductible as a tax reduction, but here it is irrelevant because you are going to choose the new tax regime under which no deduction is allowed. So only one thing, just for the sake of interest on our life, we are taking the policies. What is the material thing in this discussion is, when your these policies matures, you get the maturity amount, right? This maturity amount was totally non-taxable till last year. There is no exemption, there is no minimum limit. Whatever you receive on these policies as a maturity value, it is exempt. Whether you take it as a alive person or after a death, whether your legal heir receives it, that is not taxable. Under the new regime, this under old regime or new regime, whatever, up to last year. From current year, they have brought a ceiling. What ceiling is that? If your premium on a single year for all the policies put together, not against one policy, all the policies put together, you might have had some 6 policies, 8 policies, 10 policies with different insurance companies, all that. It goes by the person, it goes by the PAN. If your total premium paid on a single year is more than 5 lakhs, this 5 lakhs is the main catch. More than this 5 lakhs is premium paid means those policies on their maturity will be taxable. Completely it will be taxable as per your tax bracket. So this is the negative part. But you all know that most of our people will not be paying 5 lakh premium, because most of the people will be having the income itself between 5 to 10 lakhs in the middle class, middle or lower middle class. So this is not going to hugely affect normal people, but a little bit higher middle class people will get affected because of this. This is one of the negative factors. As far as we people are concerned, individual taxation people. In the share market aspect, I'll come. What is the negative factor on this? I'll discuss in the later part of the video. So I have discussed 4 important positive points and 1 point in the negative side as far as individual taxation is concerned. Okay, and one more point which generally layman or normal person will not be much interested. Only professionals will be interested in that. They've given a new advantage. What is that? Sorry, new concession. What is that? You might have heard about presumptive tax, under which you need not maintain any accounts. You can declare certain income. On that income, considering some expenses, the government has given a rate. At that rate, you can pay the tax, or at that income, you can pay the tax. As of now, the professionals like chartered accountants, doctors practicing, not working as a doctor in any other place, they should practice on their own and advocate, or any other professionals. They should come under the category of professionals. If they come under the category of professionals, there is one type of filing which is called presumptive tax filing, under which you need not maintain any accounts. Based on your bank statement, whatever you receive as your professional income, that is calculated on that. If it exceeds 50 lakhs, you have to file under normal filing form. If it is not exceeding 5 lakhs, you can go for presumptive tax filing, which means if your total receipt is 40 lakhs, you can take 20 lakhs as your taxable income. On that, you calculate the tax and pay. So this threshold of 50 lakhs of professionals has been raised to 75 lakhs. This is to some extent more beneficial for most of the professionals. it will not affect many of the individuals which is not falling under this category. And you all know that most of the people will be coming under the other category, not under this category. So, but anyway, it is an important point regarding the taxation of individuals. So, we have discussed most of the items, almost all the items which is either beneficial or detrimental to the individual taxpayers. So let us finish this taxation aspect, and now let us take some important features of the budget into the share market perspective. As a trader, as an investor, as a long-term investor, whatever you call it. Investors are classified as short-term, long-term. Traders are classified as intraday traders or weekly traders, swift traders, swing traders, whatever you call it. Point number one. Fortunately, our finance minister didn't touch the LTCG. What is that LTCG? Long-term capital gain. Okay. What is the implication of this long-term capital gain? Since some years back, if I remember correctly, it is 2018 or 2020. Before that, it was not taxable. The process, the condition is you have to buy out of your income and you have to hold those shares for 1 year. Whether you buy it from your income or from loan, that doesn't matter. You have to hold it for minimum period of 12 months. If you are holding it for 12 months, it will fall under the category of long-term holding. So after holding a particular stock for more than 1 year, without buying and selling, you shouldn't have done this buying and selling during the course of 1 year. Then it is coming under long-term purview, and after 1 year, if you sell it and make a profit on that profit, there was no tax before this LTCG brought it. LTCG tax brought it. Okay. Last year, if I remember correctly, it is 2020. In 2020 budget, our finance minister Nirmala Sitharaman, she brought tax on this long-term capital gains with small concession like 1 year is exempt, 1 lakh is exempt. That too up to 10 lakhs only. If your long-term capital gains is more than 10 lakhs, even that 1 lakh is not given as an exemption. So like this small concession, she brought the long-term capital gain tax into effect. But when actually the STT, security transaction tax was brought in by Manmohan Singh, if I remember correct, by Chidambaram under Manmohan Singh regime, it was clearly mentioned that STT is being brought down because of the scrapping of long-term capital gains. Since the government is not going to tax the long-term capital gains, you are bringing this STT. This was the phrase mentioned by that then Finance Minister Chidambaram. You all know that we used to forget so many things, and that is a plus point for the politicians. And this finance minister brought this taxation without remembering those quotes by Chidambaram. Those quotes or promise, whatever you call it as. So they ignored that and brought the taxation. Forget about that. This is history. Most of the rumors up to 1st of February, on which our finance minister placed the budget on the parliament, there were huge rumor going around that the holding period of this 12 months will be extended to 3 years. I mean, 1 year will be extended to 3 years, which is 36 months, as like any other asset. Even now or even earlier, any asset other than this share market, if you hold it for more than 3 years, that will be considered as a long term. Only for the purpose of share market, they defined this for 1 year. Why? Because to inculcate the habit of investment in the market, to boost investment. So there was a rumor going around that it might have been increased to 3 years. Thankfully, fortunately, luckily, whatever way you call it, it was not touched. Had it touched, then you couldn't have imagined the fall the share market would have faced it. Even otherwise, it faced a huge fall. Why? Because Adani. That I'll touch in this video itself on the later part. So thankfully, we have fortunately, luckily, we have escaped from that punishment. So it is untouched. That is one positive point. It is not a positive point, which was supposed to be a negative point, that has been given an exemption, given a go, right? Okay. So what is the other negative point as far as the stock market is concerned in this budget? One is more taxation on the cigarette. this is only for smokers, not for non-smokers. So initially, what the market felt, knee-jerk reaction, we used to call it, right? Whenever some news comes, we react immediately to that without analyzing what is what like. So the particular share, ITC, and one more share dealing in cigarette is Godfrey Phillips. Both of them fell drastically. I didn't follow Phillips, I followed ITC. Before Sitaraman announces this more taxation on cigarettes, the ITC share was trading around 355 to 356, 57. Once it is announced by her, it has fallen from there to 320 levels, almost 8 to 10%. It fell from that level. But why it recovered so fast then? Two reasons. One is you all know about the positioning. The market is about demand and supply. So when there is more supply, irrespective of the news, the market will go up. Similarly, when there is more demand, irrespective of the rate or whatever, irrespective of the news, the share market will come down. So this is the theory. When supply is more, the rate will come down. When the demand is more, the rate will go up. So this is the theory behind the share market movement. So many people shorted the script thinking that it will fall still more, like maybe Adani, something like that. But it is not so. Why? Anyway, this tax increase is not going to affect the company. Two reasons. One, they are not going to burn their fingers. This is going to be passed on to the ultimate consumer, those who smokes. And second part, nobody will stop smoking just because of this rise. Everybody will continue smoking the same quantity of cigarettes. Maybe initially they'll reduce by 1 cigarette or 2 cigarettes out of the 10 or 15, whatever they normally consume. So the company is not affected. Point number two. I'm sorry. One is they are not going to, the sale is not going to affect it. And the point number two is the company is not going to get affected because of this increase. So only when people realize this, by the time the position has changed and there were more sellers, both this propped up the share and it raised, it crossed the earlier high. And yesterday, after the budget day, yesterday it shot up still more further. So this is one aspect. Negative, it was thought as negative, but it is not negative to the company. It is negative to the person who is consuming that product. So point number two, which is the second negative. Now we have discussed about one positive, that is capital gains not touched, and one negative, that's cigarette rates are increased. And the negative, second negative is this. We discussed about the increase in rebate limit, no, from 5 lakhs to 7 lakhs. That caused a huge panic among the insurance companies. Why so? Their main USP is this tax deduction investments among the income tax paying community. By saying this, by citing this only, they sell most of the products. If you invest in this, you get a financial benefits as well as you get a deduction in the IT angle. So they were able to sell their products easily. Hereafter, it is not going to be so. So because most of the tax-paying community, they need not pay any income tax, even if they don't invest up to the 7 lakhs of income. This is a huge negative for the profitability for the sales. So that's why all the life insurance companies, SBI Life, HDFC Life, LIC, fell drastically on that day, that is 1st of February, and the selling was being followed up on the second day also. Yesterday also it fell sizably. If I remember correct, HDFC Life almost fell by more than 8%. On the day of budget, from 682 yesterday up to 580 to 470 levels. It fell 477 if I remember yesterday's close. So this is a huge negative for the market as insurance company business. So only these are all the main factors affecting our people, like a common income taxpayer and a common share market trader. We are not discussing about the difficulties or the plus points or minus points from the perspective of financial analyst, share market broker, and mutual funds and macroeconomic factors, all that. Because we are the most part, we are the major players in this budget affecting community. So that we have discussed, all these points we have discussed. So what is left is share market, why it fell for the last 2 days, first and second. Is it because of the budget or something else? Because of the budget, it fell on only one factor, that is this 7 lakhs limit increased, so that insurance companies will get lesser sales, lesser income, lesser sales, lesser policy, whatever you call it. So that is going to affect in a huge manner. Why? Because all this money, most of the monies are invested in the equities. Some portion is invested in the bond, some portion is invested in the mutual fund. Most of the money is, even in mutual fund also, indirectly it relates to the equities. So in that way, the market is affected. In that way, it is a negative for our share market investments. So what is the other one? Why it fell so then for the past 2 days? I'll cite two reasons. One reason is, three we can put, because yesterday one more development came, that also I'll tell you now. First reason is Credit Suisse. It is a financial institution. It was allowing their investors to give Adani bond as collateral for the share market trading. What is this collateral for share market trading? Normally, when we open account, we transfer fund from our bank account to the broker account, and we keep some balance like 1 lakh or 2 lakhs, and we keep trading intraday or keep buying for that 2 lakhs. After that, when our share prices increases, we sell that. This is what we all know, right? There is one more aspect, which is that instead of putting direct cash into a share broker account, you can buy some bond like Bharat bond or bond issued by the listed companies like Adani, Reliance, Tata Group, whichever is the company. You can buy that. On those bonds, you will be getting some interest. So that way, your income is boosted to that extent. At the same time, on pledging these bonds, the brokers will give you leverage for trading in the market. Let us suppose you buy a bond for 1 lakh and pledge that 1 lakh into the share broking office and take a limit for trading for up to 60,000 or 70,000. On that 70,000, you can trade intraday and make profit out of that. So this was there. Most of the advanced, high net worth, such a people are doing like this only. Because they don't want to park their fund without any advantage for the financial aspects. This Credit Suisse on 1st of February at 1 o'clock, when Nirmala Sitharaman, financial minister, was speaking on the parliament, they gave a note saying that hereafter they are not going to accept the bond of Adani. Kalas. What happened? So what is the reaction and what is the alternative arrangement should be made? Either you have to square off your position, point number 1, or you have to give some other collateral, point number 2, or you have to transfer the fund, point number 3, or you have to take a short position in the future if your limit is allowing that. So these are all affecting the share movement of the Adani. It fell drastically. It fell almost 31% on that day, from a high of 3,000 to a low of 2,800, if I remember. 3,000 to 1,800, and it closed at 2,100 something. This is one of the reasons. So, and the second reason, that is on yesterday, that is the 1st of February fall is mainly due to this. Apart from the insurance company negative news, this Adani company news was the second one. Why it fell yesterday? Again, one more point. Credit Suisse is gone. That is on 1st. On 2nd of February, Citibank also came out with the same note. So again, 21% gone from the share prices. That is from Adani. Is it only related to the Adani? No. Why? Because the basic credibility of Adani group companies is falling day by day because of one after the other bad news. So it will indirectly impact all the financial institutions who lend the money to the Adani group. And the third negative point is they have withdrawn their follow-on issues. You all know that the biggest in Indian share market follow-on issues, FPO, follow-on public offer, was floated by this Adani 2-3 days back. The subscription was supposed to be over by 31st. They declared that it was successfully subscribed. But in spite of that, on 1st of February, they declared that they are withdrawing this subscription. They have been withdrawing this FPO and giving back the subscription to the investors, those who have invested this. So it indirectly, why they have mentioned, morally it is correct. Moril, what they've done is should be a welcome, because the band is for those share price between 3,100 to 3,200. But when it closed on the day of subscription, 2,800, and the next day 2,400. Yesterday it is 1,400. 2,100. Yesterday it was 1,400. So they declared, they wanted that the investor who trusts them by investing this should not suffer by way of loss. So honestly, they withdrew the issue itself. But indirectly, what does it? Indirectly, what is it is conveying? It is conveying the loss of confidence of the promoter group on their own company. So they are not confident that they can bail out the investors and they can bring the price up to the level of FPO band. So that is the main role which played yesterday for the fall. And on top of it, even Citibank also denied their bond. So hereafter, what I suspect, what I feel is more such bad news will come. Yesterday it closed at 1,400. What next can be possible? They'll be degraded by most of the rating agencies for borrowing, further borrowing. So all those things will happen, and they cannot think of second follow FPO which have been withdrawn recently in the near future, because unless otherwise they bring this share price more than 3,000 rupees. Still such step, that is not possible. So their entire financial stability is in trouble now. Now, Mr. Gautam Adani has come down from 2nd position to 7th position on February 1st, from 7th position to 13th position on February 2nd. After the close of the market, we have to say in which position it's going to be placed now. So these are all the negative factors as far as the market is concerned. So finished. We have discussed about the budget on individual taxpayers, individual salary classes, plus and minus. Similarly, for share market aspect, plus and minus regarding the budget. And as far as the fall of the market on and the day after the budget. And we have concluded that this fall is not mainly due to the budget. Only you can rate it around 10 to 15%. The rest of the percentage definitely contributed by Adani Group. So what we have to do hereafter? That is a very important point, both as far as budget is concerned, as far as Adani Group is concerned. As a trader, as an investor, you can strongly believe that the market will recover. It has to recover. The budget has not given any bad thing as far as the economy is concerned, as far as the market movement is concerned. Only the financial stability of one of the major groups in India is in trouble, that is Adani. And we don't know what will be the real impact and which are all the companies being involved by way of investment in this company. That has to be watched. As an investor, one point, you avoid Adani Group. Even you don't park your party fund. You all know what is party fund. The party fund, you can always ready to forego. This is not going to have any impact on your lifestyle. This is purely surplus money. Even you don't park that fund in the Adani Group. Second, which is affected mostly, is insurance companies. Take for example HDFC Life. It has fallen almost 25%, 20 to 25% in 2 days. Can you think of investing that? Yes, you can think investing that. You can invest in that. It is a very good group company, and this is only knee-jerk reaction. And I hope that these people will come out with a new formula, will come out with a new model which is acceptable by the investing community. Leave alone the deduction benefit. They'll make very attractive from the perspective of the investment act. So by all means, you can use this opportunity to invest in insurance companies, not in Adani Group. This is my sincere view and sincere advice to you all. Hope you have got some more important information on this. Again, I apologize for the delay in publishing this video. One is I'm busy. The second is we are not going to have any immediate decision on this. Only these things you have to take care of for educational purposes, and for trading investment also I have given some advices. So hope you people will be very careful about the Adani Group, and you can keep investing in the other good valuable stocks. Happy trading, happy investment. See you in any important occasion. I'll try to post more videos hereafter on a regular basis. Thank you. Bye-bye. Happy trading.